Attendees are in listen-only mode.
Hey everybody, Preston Bryn here for our weekly roundup for the trading week ending April 28th, 2017, the last trading day of the month of April. I'm going to keep this update rather brief. I'm on the road this week. I'm going into early next week. What I've got on the screen here is the S&P 500 E-mini futures. You can see here that uh, I still don't believe this down move is over yet. I think we're going to get a little bit of a brief move higher. I think it's going to suck some folks in, and then I think it's going to roll back over again. We're setting up for a bearish divergence. You can see here, 2401, I've been telling our members, even though we've been in this little down channel here, we broke out to the downside. We held up at 2317. I thought we'd go down to about 2300. But we caught ourselves. We're starting to move back up, but I believe it's going to tire itself out and then roll back over again. Either way, we've got some longs that we're playing. We've got some other trades that are working out very well, and we're doing well in the commodity market for our members. But I do believe that the markets just need a little bit of a rest here. And that's what I think we're going to get. Now, if we look at the NASDAQ, you would say, wait a minute, au contraire, Preston, because the market seems to be going higher and higher. In fact, we made new all-time highs on the 27th in the NASDAQ. But again, we're setting up for a bearish divergence. I think this thing can pull back at least to the 50 EMA, which is around 5,400, about 200 points south of where we are now. And then I think it's going to catch some wind before we move higher. In any move higher, I think it's just going to suck people in a little bit. If we look at the Russell, that's the worst performer of the day as we ended the week. You can see that huge red candle here coming down. We caught a support level here. You can see the 2017 open price. You can see these blue lines over here, which is volume over price. Buyers and sellers are really duking it out. You can see 1360 right at the major control point for the max volume is where we open for the year. I believe the Russell, you know, I want to see if the 50 EMA can hold up. We don't have any bearish diversion signals on here, so this would indicate that this move off these lows near the 2017 lows was a valid move. So that would tell me that any move lower is just a dip opportunity before we run higher again. So we're getting some cross currents, but either way, I do believe it's going to be a choppy week. Now, if we look at volatility, volatility finished the week at 1082, very low for the VIX. Look at that. I mean, it's just extremely low. We had a huge gap down. This was based on the election this past Sunday with and I do believe that Le Pen will lose the French election, which will probably further put wind in the sails in the bullish camp for a lot of markets, especially the European market and the euro. Push the dollar down a little bit, but you can see the volatility has come back down here. Now, when vol gets this low, I will tell you guys that, you know, obviously you probably already know that the most likely direction is higher. We're in a consolidated mode right now. We've been in a dip mode, but I do believe in the equities, but I think we're going to try and make another run up, and I don't know if we're going to be able to hold that before we roll back over again. So I'm just watching that. I'm watching to see if the vol moves back up higher, at least back up 13 or 14, closes this gap here, and then we just move on from there and the equities roll back over. If we look at the euro, if we look at the euro, now the euro is one of those trades that really gapped up. I mean, you can see the 2017 open price and where we're sitting now, that big gap on the 21st. That was that election in France, and you could see just how much downward pressure was on the euro leading up to that election, and boom, we went higher. We've been trading the euro, and I think it's going to work out to be a great trade. I think there's going to be some great opportunities in the euro over the next 6 months. But you can see this pattern here. I think it's just going to consolidate for a bit and then break out higher, particularly around May 7th, which is the final election for over in France. And I think if Macron wins, then you're going to see the euro. I think the euro is about 5 to 10% undervalued. I can see the euro up to $1.12 to $1.15. So that's kind of where we're playing, got our things running right now. And then, of course, the British pound is really strong as well. Theresa May is going to have her problems over in Great Britain, but I think the British pound is going to be a great trade over the next couple of years. primarily to the upside. You got to be careful until they start to work out more details on their exit. But I do believe you could see we held up at the 200 EMA for over a week, this yellow line, and then we finally busted through. So that'll serve as support around 128.68. But I do believe the upside looks more favorable for the British pound. Meanwhile, the U.S. dollar is just, staying right in this support area right here. And granted, Yellen is probably going to be forced to come out and raise the rates. They're going to have to reduce the balance sheet as well, the 4.5 trillion balance sheet here in the U.S. books. So that's going to cause rates to go up a little bit. But it's going to be a race now. It's going to be a race between Yellen and Draghi. If Draghi starts to indicate more stimulus, I think even with the interest rates, you'll see the dollar is subdued and the euro will go higher. Remember, the dollar is not the dollar. It's an index of other currencies like the Swiss franc, the Canadian loonie, the British pound, the euro, the yen. And it's where those currencies go is what drives where the dollar goes. So, and the euro amounts for, 57, 58% of the value of the dollar index. So, and if the euro gets stronger, which I believe it will, it's going to put tremendous downward pressure on the dollar, probably make it even go lower. And then, of course, if we look at bonds, the bond market has been, what does the bond market know that the equity market doesn't? The bond market has been moving higher since the middle of March. Now, March was pretty much the equities were in an orderly down move. Orderly because the volatility never really got that high. And we moved down off the highs throughout the entire month of March. And then we've come into April. And as we've gone through the month of April, you can see that we've moved back just a little bit. But I do believe the bond market, it's been moving higher since the mid-March area, and it's holding up. So I suspect the bond is going to make another run higher, probably take out this level up here, get up around the 155, possibly even the 156 area before it's ready to roll over, which would mean the equity market will probably roll over near term and then catch itself. I don't see any great movement up or down. I'm just trying to call out some minor moves, 2-3%, something like that. If we look at gold, it's been showing a little bit of strength here. You can see gold really off the lows back in mid-December of 2016. We've just been making a series of higher highs and higher lows. And right now, there was not a divergence between this Elliott Wave 3 and an Elliott Wave 5. Normally, with an Elliott Wave 5 move up, you get a divergence in the MACD. In this particular case, we really did not. That tells me that this is only a dip, and we're going to be interested to see this thing run higher. You can also see the red line crossing the yellow line. That's the 50 crossing the 200. So again, that's a bullish signal for gold. I'm not ready to go long yet, but it does seem to indicate that gold is going to start to be moving higher. And then, of course, there's oil. Oil is really interesting. The minute Goldman Sachs came out and said oil is going to the low to mid 60s by the end of the year, I was more confident in my shorts. I mean, I was confident in them anyway, but whatever Goldman says, I like to take the opposite stance anyway. And you can see here, gold has just been in a hard move down. Now it's caught itself at the 200 EMA, okay? We've had 5 successive and successful trades on in the oil futures market each month, playing options on oil, and we've had and we've got a current one now that will probably shut down before the oil inventory report next week. And that one looks like thus far we're going to do very well in that one too. For those of you that like to trade options and commodities or options and futures like this, and some of the other things that we're doing, then I highly encourage you to come in and join us, because we're getting a pretty diverse group of folks, and we seem to be doing very well this year. But anyway, getting back to the trek. I think oil is going to catch itself down here. I don't think it's going to go too much lower. It may come down and test the 2017 open or the 2017 low, but I do believe it's stuck in this wider range-bound mode here for oil. Okay, and then the only other thing in the major markets, we're looking at ag. We had a great trade in orange juice and sugar, both to the downside. Sugar starting in December, we wrapped that up a couple of weeks. I'm sorry, orange juice to the downside, we wrapped that up about 4 weeks ago, and then sugar about 3 weeks ago. Sugar is one of the worst performing commodities this year. It's down about 20% this year, and it's had the longest weekly down streak, I think, going back to like 1961 or something like that. Now, we took advantage of it, made some great money in that trade, and we're having fun with it. Now, right now, I never like to chase anything, and that commodity has pretty much chewed the flavor out of the gum on that trade. So we've been out of it for 3 weeks, but it turned out to be a great trade for us. So just getting back and wrapping this up really quickly, and then I've got to bounce. You can see right here that I do believe we could run up a little bit higher. Maybe the momentum may carry us up, but I think the next step is once we take out 2401, you'll see it maybe a couple of final thrust higher, and then it's going to roll back over, and then we can end up testing this area here. The only thing that would change my mind is if we get a run up and then there's follow through in the next day or two with convincing volume. That would support it. But otherwise, I don't see that happening right now. All right, everybody, have a great weekend. If you're not in our group, I highly encourage you to come in. Members, I will see you this Sunday night when we review our secret trader and how we're doing there, which we seem to be doing very well so far this year, like last year. And then we'll talk about the upcoming trading week Sunday night, 8 o'clock New York City time. All right, everybody, have a really great weekend, and I will see you folks next week. Bye now.